All right, so today, Bitcoin, of course, really aggressive on the charts, breaking 54K. Just started to go over as we started filming this one, so we're going to break it down for you guys. You're going to love it. My name is Paul Barron. Welcome back into Tech Path. Joining me today is Dante Cook, who is coming over from Swan Business. Of course, Swan Bitcoin. Great to have you on the show, Dante.
Hey, thanks for having me, Paul. Excited to be on.
Excellent, excellent. So let's get into a few things here. And I want to get into, first of all, we talked a little bit about this on the pre-show. Swan Business. Talk to me about what you do there at Swan Business. What's your main goal?
Yeah, so Swan, we are the second largest Bitcoin-only exchange in the world to Cash App. We serve retail investors internationally. We serve institutions and businesses. So that's primarily my role. I help entities and companies that want to add Bitcoin to their corporate balance sheet, like a MicroStrategy or kind of in that lane. And so, Swan, we serve both institutions and retail investors with our platform.
Yeah. Are you seeing more and more high net worth individuals, business owners, corporations starting to look at putting Bitcoin on their balance sheets? Is that something that is really lifted up since the ETFs?
Absolutely. The ETFs have been obviously a huge driver of it because, I think the thing that's very different, from 50K Bitcoin in 2024 versus 2021 is I think the legitimacy that a BlackRock or a Fidelity or a VanEck will bring to the conversation, it really allows you to talk about Bitcoin in the boardroom differently than when, the front runners were Binance and FTX and Gemini and
Right.
Celsius and Voyager. And so the conversation is legitimized in a way that it wasn't before. And I think the other thing that, adoption, clearly brings from these ETFs is you get more of the marketing in the top of the funnel. I mean, obviously Bitcoin doesn't have a CEO or a marketing team, but BlackRock's pouring millions of dollars into educating people, both institutional and retail, about Bitcoin, which is, again, very different from 2021. And so the conversations are more pervasive. They're allowed to be had. And then you can start to look at what I think Bitcoin has always shown to be a great hedge and reserve asset for anyone that's holding cash on their balance sheet.
It's been one of the things that we've continued to track is just the success, to your point, is with these ETFs, even our own ETF tracker, which is looking at sentiment on a lot of these major institutions out here, including BlackRock and Fidelity kind of leading the way right now. But the point I'm getting at is that sentiment right now on all of these ETFs is very, very positive right now. So we're seeing both from individuals that are starting to look at Bitcoin as a new store of value. Maybe they're looking at it from a treasury standpoint, or they're looking at it, on a more speculative approach, which is I'm looking at a 5-year, a 10-year run on this looks like. So I think I agree with you, obviously, with the component of just ETFs in general have legitimized it. My question to you would be, what would be next for Bitcoin, especially around drawing in retail investment? Sure, an average person may not necessarily go into a Bitcoin ETF, but they're starting to get a lot more curious about it. Is there anything that you think is going to be next up for Bitcoin to be able to really draw in mass adoption from a retail standpoint?
Yeah, I think there's, in our financial system, the way that it's set up today with, a lot of fiscal and monetary, I think leverage that comes into the system is you have these boom and bust cycles. And right now we're near the peak of one of these boom and bust cycles where you get to see that rising inequality and wealth gap. And, you obviously have runaway inflation right now, which is, coming down, but it's just coming down at a slower rate. And so I think people are really feeling that burden, when they go to the grocery store every day. And so the conversation around your dollar essentially being a melting ice cube is one that's being had not just by institutions, but by normal everyday Americans. And the thing that I think you start to see around these cycles, whether it's with Bitcoin or other things, is you see people start to speculate and gamble more. I think a Forbes article said that there were $66.5 billion worth of gambling in Americans alone. And it's so meta that SNL is doing skits about gambling on your degenerate friends who are gambling, right? And so that's how we've gotten to this phenomenon. And so when you look at the retail volumes on a platform like Coinbase, when you start to get near a bull run, what you're actually seeing is that in terms of the retail buying volume, we're nowhere near close to where the frenzy
Right.
sort of goes to when prices start to rip. So although prices have been going up and have been going up steadily, I don't think that we're even at that point where people are FOMOing in. I think, you start to see when people are, you call it the neighbor effect, right? When your
Mhm.
neighbor is posting about how much money they made off of a certain stock or altcoin or, JPEG picture, that's when you really know you're kind of in the heat of the bull market. And I don't think we're there yet.
I was looking at the just the general chart here on USDC, and one of the things, if you go back and look at their top on USDC back in June of 22, around 55 billion, and then here at the bottom, pretty much around January, or excuse me, November of last year, and now we're starting to see a little bit of a move come up. This means, and most people would look at this and say, okay, there's a lot of people looking at getting into a stable coin, prepping for entry into the market, and getting ready, whether it's on exchanges or other formats out there, DeFi, et cetera, that are playing into this. As we start to see stable coins get into mainstream, and if we were to see regulation coming in this year, do you feel like that would only add to the Bitcoin narrative overall?
Absolutely. These stories may or may not be founded, but I know that there's at least one story about the Nigerian government essentially capping the peg that people could trade USDT for the naira, and
Mhm.
I think it was 802, USDT dollars for the naira. And what was interesting is that people really just took to Telegram. They created their own market and started to subvert and go around the
Interesting.
doors that the government were trying to create. And so that's what's going to happen essentially with Bitcoin. I mean, the most interesting thing about the emails being released in the Copa case, when you look at the design choices that were made with Bitcoin from Satoshi Nakamoto and these
Yeah,
emails,
recently. Yeah.
talking about how proof of work is the really the only mechanism that he could think of that would allow the protocol to not be co-opted by the government. And just last Friday, you saw a transaction of $1.3 billion with a transaction fee of $2.03.
Yeah.
And so that's revolutionary. That's what this, I think people look at it from the number go up technology, which brings a lot of people in. But ultimately, the original design was freedom go up, and how do we have peer-to-peer transactions without a third party in the middle? And so I believe that, over this next bull run, as you see fiat debasement, I mean, I think we've been tracking Bitcoin has made all-time highs in 20 currencies in the past 2 months. And so you can clearly see that people are starting to look for the exits. And so when that happens, they're looking for a way to convert into crypto assets. And typically that's through stable coins globally.
Yeah, and of course you have 2.2 right now million, market cap of 2.08, up almost 5% on the day, obviously due to what's happening with Bitcoin right now. But you also have things happening like this right here with Michael Saylor. He's jumping in another 3,000 Bitcoin. That's crazy. Another 155 million worth going in. But this also, to me, really, I think, signifies a very strategic shift that could be happening with business much faster, especially if you look at some of the accounting rules that are going to start to shift. Now you're looking at the regulatory framework, maybe getting it a little bit more aligned, and obviously the ETFs. My question is this: is this the cycle that we truly see mass adoption from both, whether it's businesses like you're working with or more institutions that are just going to come off the sidelines and instead of putting cash off the sidelines into traditional assets, going into things like Bitcoin, et cetera?
Certainly, I believe that that's the case. And Michael Saylor is such an interesting case because Michael Saylor publicly before 2020 was a Bitcoin detractor, and then when surveying the impact that money printing had on his business, he had a declining revenue business. The stock price was sideways or going down, and he had about $500 million in cash, and he needed a way to park that cash that would preserve again the enterprise value that they needed in their company to attract employees and have a healthy business. And from that point on, Michael was one of the rare people to humble himself and to say, you know what, let me do this thing. Let me try this thing, that Bitcoin might not just be something to speculate on, but a savings technology. And obviously that's proven to be correct. I mean, MicroStrategy is up 466% since adopting the strategy in August of 2020. And he's employing like a very interesting strategy that can only really be done in public markets, in that when the enterprise value of their company goes up, they issue more common stock, or they acquire more debt at cheap rates. And then with that debt, they acquire more Bitcoin. And obviously, if the price of Bitcoin appreciates, the enterprise value goes up. And it's kind of a rinse and repeat flywheel that they're running.
I think the point you're hitting on, definitely a very interesting cycle for what is happening with MicroStrategy, because it's a great hedge, I think, for a lot of people who wanted exposure to Bitcoin but weren't ready yet. And at the same time, we saw a period in time which we didn't have an ETF. MicroStrategy kind of was the ETF, if you think about it, from a stock standpoint. And that stock, of course, has paid off for a lot of people. Jacob Canfield tweeted out here, BlackRock and all other spot ETFs, smartest products ever created. They've created a circular loop of investor capital that is complete win-win. To your point exactly, is that we are seeing this start to result in this. My question is this: we're still in a very small market. When you look at the Bitcoin overall market cap, you look at the market cap of gold ETFs, of gold in general, and then you stand back and kind of look at the options that are available to the markets, to your point earlier, that start to play into the de-dollarization and what that might look like if we start to see real de-dollarization, especially in the Western countries. With all of that happening, and back to my original question to you, is this the cycle that we really see this parabolic move, or do you feel like it's going to take a little bit longer to get more companies and individuals into Bitcoin?
That's hard to tell. I think this will definitely be, I mean, there's a psychological aspect to it crossing $50,000 or $70,000 or $100,000 that I think will allow people to come in psychologically in a way that they haven't. I mean, it's still a $1 trillion asset that 15 years ago had a value of zero. So I think in that term, people are certainly late to the game, but I think we're still in the first innings of this sort of cycle. And, a lot of the things about this, you mentioned kind of the new FASB updates. You're talking about it from a corporate or an institutional standpoint. The new FASB updates or new accounting rules that says you're allowed to hold or mark the price of Bitcoin at its fair value on your balance sheet, regardless of whether it goes up or down. And so that's a change from before. That's, new to even companies who have been holding it on their balance sheet. So there's still a lot to be figured out in terms of regulation, in terms of how the government will react to Bitcoin when we have cycle. I think that's the thing that some institutions or people are fearful of. They say, yeah, I believe in this modern technology. I believe in this global decentralized, asset. But what happens when we are in a depression? What happens when we're in a recession? Will the government an executive 6102 order? And for the people that are holding, Bitcoin in self-custody, holding their own keys, I think that there's probably less of a concern about that. But is there the honeypot issue that they talk about with Coinbase, being the custodian for 9 out of the 10 ETF issuers other than Fidelity? And so I think there's still some concerns there that I think the people who have been in the digital asset or the Bitcoin community are kind of well past. People who have been on that edge. You're going to see new adoption from that segment in a way that you haven't seen in the past cycles. But I think we're not fully across the chasm to mainstream yet because of some of those questions that you may have of how will the government deal with this cycle? Because I think it's very clear and obvious. I mean, Jerome Powell came out in 60 Minutes and said, we are on a fiscally irresponsible path. We have runaway inflation. We have, government interest payments on our debt crossing $1 trillion, right? The liabilities that we have for Social Security and other things are greater than the amount of interest payments that we have right now. And so I think people are starting to see that there's cracks showing in the financial system. So that's probably why you won't see the mass adoption to Bitcoin this cycle like you maybe could otherwise.
You hit on something I think that's very important here, and that is the type of investors that the market has. To your point, you've got, I won't call them the OGs, but they're people who have been in digital assets for a while. They've understand how to buy and hold Bitcoin, how to self-custody, all that. My question is, do you think we're going to see a shift in the percentage of net worth that is going into Bitcoin or other digital assets this time around? Because I think a lot of people who have held, maybe they've learned self-custody, they've gone through the alternative routes of acquiring Bitcoin, meaning they're not necessarily, maybe it's an OTC trade or it's somebody that's got some net worth that's saying, okay, I think this is the time that I want to up my percentage from maybe it was a 10% of my net worth, I'm going to go to 25%. Do you think we'll see much of that growth in just market share of net worth coming into these assets?
Absolutely. And from Swan's perspective, we're already seeing that. You mentioned kind of the differences in investors, right? The people that were at zero or kind of had a speculative eye on the asset class. When you look at Fidelity's all-in-one fund, their Canadian fund, they're talking about a 1 to 3% allocation. And that's what you're going to see RIAs and investment advisors and people on Wall Street talk about in terms of Bitcoin. Get a 1 to 3% allocation. But for people who have, been in this, who are a little bit further away from the money printer, are starting to see that there's, not a lot of hope in terms of stock, in terms of real estate, in terms of other alternative stores of value that actually look as attractive as Bitcoin in this upcoming cycle. And we know that Bitcoin is the best beta on global M2 liquidity, which means when the government prints money, it is the best performing asset. And so you have commodity like properties with NASDAQ stock like, price increases. And so that's the shift. I think you accurately point that out, Paul. The people who are going to get into it are, going to dabble at 1 to 3%. And the people who have been in it are going to go from, 10% to maybe 20% in terms of their allocation. And we're seeing that in our business.
I'm looking at a tweet here from Eric Balchunas, one of the ETF analysts over at Bloomberg, simply says gold's pain, Bitcoin's gain, store value is smackdown. He thinks that we might see decent chance here of Bitcoin ETFs passing gold ETFs in assets under management in less than 2 years. Some people are really aggressive on this. Do you think that if that were to happen, first of all, that would shift Bitcoin into, I think, a stratosphere that I'm not sure everybody can completely get their hands around of what that's going to look like and their minds around. 2 years, do you think that's possible? 2 years to basically outpace a $12 trillion asset class?
Absolutely. I mean, in less than 2 months with the Bitcoin ETFs, you can see the inflows into the ETFs, like roughly, I think $5.5 billion of inflows into the ETFs. And that's with GBTC with 7.5 billion in outflows from, the different selling pressure points that they had from liquidations. And so I believe that that's absolutely going to flip, because what you're seeing is you have this 40-year trend of, baby boomers storing their wealth in gold, storing their wealth into real estate, and storing their wealth into stocks. And so when you enter into these cyclically high interest rate environments, well, those assets are not a good place to store your value historically, right? And so when you can't make money off of refinancing your real estate or flipping over commercial real estate debt, well, then how do you shift that money? That money's not going to just exit the system and go into a shoebox, right? It's going to move from that analog physical asset into a digital asset, which is clearly Bitcoin with these ETFs. So you're just seeing this massive shift of $900 trillion worth of analog wealth. I don't think it's crazy that, with gold at $10 trillion, we're going to see 1% of that shift digital. I think that's a small number. And that,
pretty significant if it happens within the next couple of years, for sure. I want to get into the political side, not that we're picking sides or other, but you have a lot of pressure on the regulatory front, and now it's possible we could see a little bit of awareness and pressure coming in from these elections themselves. Here was just Coinbase revealing the influence of crypto in the Texas elections. You look at former President Trump, he's now kind of gone on record saying he's not necessarily against it. He's definitely no Senator Warren, who is out there pretty much campaigning with the crypto army against it constantly. Do you think we're going to see a lighter touch from the candidates that are coming into this cycle? Because remember, we've got the Senate, the House, all of which are pretty much up for grab. I think it's 33 seats right now that are coming into this next election, coming in November. Will we see a lighter touch, or do you think people are going to double down on Bitcoin and digital assets as a whole, kind of as a sovereign right to Americans?
I believe so. And before we just even dive into US politics in particular, when you look at the success that Javier Milei, president of Argentina, has had in terms of his campaign coming out of seemingly nowhere to be elected the president of Argentina, and literally in his first 2 months, they turned their first monthly budget surplus in 12 years in Argentina, $559 million. And then you contrast that with, Nayib Bukele, the president of El Salvador, the first president to make Bitcoin legal tender. And you look at the success that they've had, you see Bitcoin in profit in terms of their treasury. You see crime go down. You've seen an uptick in tourism and interest in terms of their country. You see those international examples, and you start to see that Bitcoin, as Donald Trump said, like this thing is for real. I think for American politicians, they don't quite understand it maybe a way that a, South American or Central American president or would understand it. But you see Tom Emmer, you see Senator Lummis, right? You see people that are on the other side of the aisle. You see even Nayib Bukele speaking at the CPAC convention in Washington, D.C. this past week.
That was a
it's
great
clearly
speech.
It's
Did
a
you
great
listen to that?
speech, right?
It was amazing.
I listened to the speech, and the conversation around, if the government can just print money, why are you paying taxes? That conversation isn't just in the, the crypto or Bitcoin or digital asset lexicon. It's going to be on Fox News when your grandparents or someone else randomly who's watching it in this election. So it's definitely going to be a topic of discussion. And I think there needs to be a call to, some responsibility and some rights around our fiscal policy and the gap between the haves and have-nots. And I clearly think Bitcoin is going to be a major part of this upcoming election, crypto in general.
Yeah, for sure. One last question for you, Dante, and that is when you look at how well the ETF has done for Bitcoin, you look at Ethereum, people are now speculating there could be an ETH ETF. This could raise awareness around digital assets, especially if this comes out under BlackRock, ARK, Fidelity, which gives it those kind of validity monikers that most people think. Do you think this is going to happen? Do you think we'll see an ETH ETF coming? I know you guys are a Bitcoin house, but I'm just kind of curious from a market perspective.
Yeah, I think it's pretty much inevitable at this point that we will see an ETH ETF. And, although, there are some differences between Ethereum and Bitcoin, the main thing, that Bitcoiners would say is that, Bitcoin is a commodity truly regulated as a property by the CFTC and FINRA and the SEC, is that ETH, potentially represents a security, an investment contract or vehicle, that's being issued and, promoted for the increase in the price of it. And so I think there's no question that you will see an ETH ETF. You have too many financial interests behind it. You have JP Morgan, who owns about 10% of Consensus, which is one of the primary infrastructure, owners of MetaMask, the most popular Web3 crypto wallet out there. So there's no question that there's a financial interest on Wall Street. And you've even heard Larry Fink talking about the tokenization of the entire financial system.
Right.
And so how do they do that? How do you do that? I mean, I think ETH is going to be one of the avenues and portals by which they do that. It'll be interesting to see how, consistently it's regulated. Again, Bitcoin, I think, having different properties than ETH, but I don't believe that, we're not going to see an ETH ETF. I'm pretty sure that's a foregone conclusion.
Yeah, for sure. Dante, hey, it's great having you on the show. Thanks so much. If you guys want to follow Swan, go over and catch him on X, just at Swan.
My Twitter handle is Dante_Cook1. I actually do a daily Bitcoin show on YouTube. It's called the Daily Bitcoin Show. You can follow it on Swan's YouTube channel.
Perfect.
But, thank you for having me on your show. Thank you for educating people about these topics because they don't get enough coverage out there. So,
no doubt. Thanks again for stopping in. We appreciate it, Dante. All right, so you guys are maybe not dived into the Diamond Circle just yet. Well, that's our private group that, of course, you can get additional content. We do some podcasts over there. We drop some research in that tool as well. All you have to do is click the link down below. You'll get in. And if you're not following me on X, make sure and do that. It's just @PaulBaron. We'll catch you next time right here on TechPath.